Yeah, and that's a market that struggled, and that's what makes it confusing. Is it just going to start like gold and silver, or is it just going to peter out just as quick as it's flared up? Now, that's really powerful if it goes up, because everything in grains will go up and follow oil if it gets on a tear.
Hey, welcome to Hedge Heads, where we discuss the commodity markets, hedging, and anything related to trading futures. Remember, the risk of loss in trading commodity interests can be substantial. These are opinions only and not trading advice. Well, no one knows where the market's going. We're not afraid to share some ideas. I'm Ryan Tunkseth. He's John Prishman. Well, John, I was out of town for the last 11 days as my son graduated from Marine Corps boot camp out in San Diego. We got to go out and see graduation and pick him up, and it was quite the event, but I did not touch a computer. In fact, I only looked at my trading app even once, and that was to get out of a couple soybean puts.
Yeah, I saw you made some money there.
But yeah, it was not a bad move.
Yeah,
I probably should have got out of all of them after today. But
no, it's a special deal you got to do, and it's good. A break for the markets. That's good for people. So you didn't miss a lot at all, but now things are starting to happen.
So what's happening in the markets? I didn't even look at Twitter, and I love looking at Twitter. That's where all the good info is.
Yeah, exactly. That's it. Yeah, if you want to know anything, go to Twitter. So what you had is they had been buying all these commodities kind of a couple weeks ago, or even 3 weeks ago it started, and then the grains had fallen, very sharply. So we went up early September into mid-September, and then fell very sharply. Now we're starting to come up, but gold, silver, crude oil, all the energies up 3% today, or 2.5%. You're starting to get inflationary in buying, almost a stagflation. So very odd markets. Also, the U.S. dollar is moving higher, but then you're starting to see that flow back into corn and soybeans. You have very unique structure in corn where you have a lot of carry up front, and then as you go towards spring, they have no carry to almost inverses buy over new crop year. So you're getting a lot of conflicting signals. The front saying we have way too much corn, and the field reports are saying way too much. The back end saying we're going to run out of corn and we're going to have to ration it, maybe get inverted. And then December 25 just can't move up at all. It's saying we have way too much corn. We don't need next year's price. So if that confuses you, it should. It's very confusing stuff. Like, you cannot tell what's going on right now or whether they're going to buy or sell a market. Mainly this Monday and Tuesday here now, they've been buying like very aggressively across the spectrum of commodities again. So this is why you hedge for things like this. Like, you don't know the answer, and stuff like this pops up. What if they continue to buy? What if energies continue to go? To make matters even more confusing, the U.S. dollar index has gone up substantially with our back end of our interest rates going up very sharply ever since they cut rates up front. Now, they only control the front. They don't control the back end, and the back end's gone straight back up to almost 7% mortgage rates again. So really, really wild markets as far as predictability.
Yeah, one of the things I read today, and again, I've been trying to get caught up, so I haven't looked in depth, but is gold at a new high again?
Yes, in metals, and silver is the big one everybody's watching now. That's really starting to cruise down. Not all-time highs by any stretch. You'd have to go back to when they cornered the market way back when.
Sure.
But gold is making daily highs, and you got the gold and silver bugs saying, see, I told you so. We're going to get this out of control, inflation. And now grains are starting to join today, and you're getting this real inflationary feeling. But you don't have growth. Maybe technology still a little bit. So everybody's getting beat up by this inflation. So it's more like stagflation than inflation. Stagflation is basically wages stay stagnant, but the costs go up, and growth is stagnant. And that's a lot like this feels like in the 70s is what's happening. So super unpredictable. I like to just take it day by day. I mean, everybody's calling on marketing stuff. That kind of stuff is very common for storage. Should I pay? Do I do this? Do I store it? Do I sell it? A million questions off the combine every year. you should be getting good answers. And if you're not getting good answers or a knowledgeable guy, you need to work on that. That's the answer. Like, it covers such a wide spectrum for a lot of different people. But you will know when you have a good guy because you'll call him and he'll lay 3 or 4 different ideas in front of you, and you'll simply choose what works best for your farm. So real busy with that kind of stuff. Historically, one of the fastest harvests ever. The drought was faster, and I think 2015 was pretty fast. So everything's kind of coming in. I think if you go back a year ago today or within a couple of days, we topped out here last year. We're having a very similar rally, just kind of straight up in the middle of harvest. See, everybody thinks October is weak for some reason, and I don't understand. Like, there's some old wives' tale in seasonals in commodities. One is that for some reason everybody thinks grains go up in July. Very rarely does it go up in July, and it's one of the worst months you can actually buy grains. It's usually straight down in July. That's one that I've never understood. And then also October is one of the strongest months of the year. And everybody seems to think that we're going to have this intense harvest pressure and it goes down in October. That's not true at all. So we're following the seasonals. Seasonals turn decidedly lower in corn beginning November. And that can last anywhere. The 5-year, I think, is mid-November. The 10 and 15 years, the end of November. And that's what we did see last year. Peaked out here, started drifting. This is really confusing this year. And it's real simple. Either they're going to continue to inflation buy or they're not. And that's the direction grains are going to go, and nobody knows if that's going to be the case or not. Again, the dollar's going up with it, and we've seen great exports in corn lately, horrible in wheat, and decent in beans. So not a lot to write about there other than Mexico's buying way more of the corn than normal for this time of year. That's constructive. So very confusing environment. And I'm taking it day by day, just looking for some different opportunities. I'm definitely making moves in cattle and cattle hedging. I've been pretty active there. Call for details on that. Also, I'm looking at some bear spreads in cattle. Colin, I'll let you know which ones I'm looking at. So cattle activities picked up, but really tough and confusing markets. And I've been doing some fishing. I've enjoyed that a lot more than watching these markets.
Well, I was going to say, back when you mentioned oil was up 2.5 or 3% today on the crude, and I looked at it and it was still down from when I left 11 days ago. So
yeah, and that's a market that struggled, and that's what makes it confusing. Is it just going to start like gold and silver, or is it just going to peter out just as quick as it's flared up? Now, that's really powerful if it goes up, because everything in grains will go up and follow oil if it gets on a tear. But then you throw in the politics in, 2-3 weeks we're going to vote, or for people to vote, and that'll decide. I guess they're already saying it's going to be days later, but in that time frame, it'll decide the fate of grains and a lot of other stuff with who's getting elected. And that's really hard to know what is going to happen on either candidate or what their policies are going to be. Really tough stuff. So we got a lot of stuff that are going to influence the prices short term. The betting markets are going Trump right now, and a lot of the polls. So are they buying for an inflationary environment, a growth environment, or is it just general inflation because of all the debt? I mean, it's hard to know what's being traded here. If Trump gets in, is he going to do a bunch of tariffs and that's going to make stuff go down, or is he going to ban oilseed tariffs or ban oilseed importation? That would make oilseeds wildly bullish here. Very difficult environment to figure out. So I'm going to take it day by day. It's easy for me, and I'm lucky enough that I get to do that. But that's the only way to navigate this. Very, very, very tough to know if they're going to keep putting monies in commodities. But right now, you go look at some of these charts. I mean, they've been really stuffing money in live cattle. Started with energies today, definitely gold and silver. And is that going to continue? And that's the answer for the direction for grains too.
Well, that does make it a tough trading environment when it's not really trading the fundamentals.
Yep.
When we're breaking from that. So how do you watch that, or how do you look at that when you're hedging?
Looking for divergences. I mean, you're looking for, like, wheat was really weak versus other stuff. Corn's going to have a harder time just continuing climbing by itself. You're always looking for that divergence. The hint of if the dollar continues to go up like it's going up, that'll eventually obviously hurt the grain exports. Corn and wheat would be most affected by that. And just looking at volume, seeing what kind of money's coming in here. Is this temporary? And then also looking at the seasonals. Is it doing something it normally doesn't do? I would say the metals definitely are. And energies have been really confusing. Like, you've had some really bullish news in Middle East tension, and it's gone straight down, which we've actually seen that look at least 3 times over the last year. And don't ask me how I know, other than I have been buying, on the first 2, the third one didn't fool me, and I should have shorted it. I wasn't brave enough to do that either. But it seems to go down in these high tension Middle East things, and then it goes up just randomly when it's quiet. And that's been the pattern for a year now. So energy is really difficult. We were able to make some money in some heating oil spread, but even that should have been a slam dunk, and that was tough. Tough stuff there to even figure that out. So a real unforgiving environment. Happy 1 minute, sad the next, depending on if you're long or short, and that changes daily. So just one of these kind of, you try to recognize what the general pattern is and try to, get your, even if you're bearish grains with this inflationary buying, maybe cool that off for a week or look for bear spreads, or that's what I'm doing. I'm looking for stuff I want to do. Also, I even talked about, it's so confusing right now in corn. You can buy a put and a call at the money. I think it was 17.5 cents today for December, 4/15. I'm not recommending doing that, but with the volatility in these reports and the election, you got to think that you just need that to move more than 17 cents in 31 days, and then you're going to be profitable. There's a lot of shades of gray in between there. Just buying both sides right now because of the unpredictability. If you can get that volatility cheap enough, is a good idea in a lot of markets. So even when it's complicated, there's the nice thing about commodities is you can play both sides, and you can play both sides at once, which I often do in spreads, and you can do that in options as well. You just hope the volatility increases when you do those sort of strategies. So you try to get creative and buy both sides, and you can't be wrong. You just hope that it's more volatile than what the trade's pricing in. So I love stuff like that. And a lot of people that learn about it really like that too. Another place where that really works good is soybean reports. When you don't know what the numbers are going to be and you expect a volatile reaction. In the past, I've had a really good luck buying puts and calls at the money and then dropping the one side, or, a lot of things. We haven't had a lot of USDA reports like that lately because we just have kind of had a lot around. So none of these reports are going to sway it, but those kind of reports will come around. So I look for stuff like that. And then, like I say, the divergences, like the dollar going up quite sharply, and then oil and everything falling like it should. Right now, you're seeing the divergence with everything just floating higher across the board. That would be a safe haven asset, except for bonds. The long-term bonds are dropping, which they move inverse to interest rates. So they go down, interest rates go up. Normally in a flight to safety, money would be going into bonds, driving the price up, driving the yield down. So to say this is confusing is understating what's going on right now. And you just try to take it day by day and not take a lot of risk. That's my advice.
I did read something on the plane yesterday, Goldman Sachs report. They're looking at like the S&P 500, stock market in general. I don't remember exactly, but saying over the next 10 years, averaging 3% return versus the 12% it's been the last 10 years.
Yep.
And just talking about in that report at how bonds at 5 or 6 or wherever they're at now is going to be a lot better play.
Yep.
Now, we also know that news is often questionable. Is that what they really believe, or is that what they're putting out there? But I can see a much lower return on the stock market over the next 10 years. So how does that play into some
back to the
commodity?
stagflation. Yeah, so you get stagflation. So you don't get growth. You get bigger expenses, less earnings, and prices continue to go higher. Like commodity prices are prices. And then wages stagnate as well because there's no growth. It's a terrible thing for an economy to go through. That's exactly the opposite of what you're looking for. You want growth, mild inflation to go along with it, and wage growth at a nice steady pace. So it feels like the end of a cycle. And a lot of people have been predicting this for a long time. But we piled up debt, and the bond market's saying no more. The back end of the bond, like we're going to need more money for more of this debt, is what it's saying right now. The Fed tried to lower their interest rates and it's had an inverse effect, which we haven't seen that look in a very long time either. So it's stagflation for now. That can change quick. Stagflation would likely end in everything collapsing at some point because the growth would disappear and then people's pocketbook gets tight, which I would guess that is happening right now. It's pretty stunning to see how liquefied the system was after all those years of low interest rates and stimulus and payments, and how liquefied the system. It's still astonishing that when you had these expenses before in the past, you'd have saw the economy go down, but it's hanging in there. People are still buying stuff, but you got to think that cycle's coming to an end. And then, of course, it would affect commodities. So in 2008, when the wheels came off, gold and silver initially went sharply higher as a flight to safety, and then everything crashed, including gold and silver, went to very low prices for a while. Oil, I think, was $32, and so everything goes down in those cycles. But really confusing stuff, though. I mean, you take it, like I say, take it day by day. And then you throw politics in, and it's like anybody's guess of what's going to happen here when whoever gets elected in all these different important races that I got going on for Congress and the presidential race. And then on the local level, too, we're saying that. And you're seeing a lot of tension, even on the local. This is like as much tension I've seen on the local side of stuff, too. It seems very divided and a lot of signs out in everybody's yard on both sides. It's interesting times, but expected to affect commodity prices a ton, but we just don't know how.
I will say this is the first time I remember active campaigning for school board.
Yeah.
With people on both sides all over our local Facebook on that.
Yeah, which is interesting. It's gone all the way down to the community level now, and it couldn't be split any harder there, and both sides are very dug in, and a lot of finger pointing. Yeah, you're seeing that on a local level. Facebook fights, over the school board stuff, pretty crazy. You wouldn't normally see this. Real high tension, it feels like. And again, it'll affect the markets. When Trump got elected in 2016, the market, I remember perfectly, the stock market plummeted when it looked like he was going to win right away. And then an hour later, it was just ripping higher. So expect a lot of volatility, irregardless of who's winning. And what makes this one difficult is it's really hard to tell what means what to what person. It'll just be whatever Wall Street decides, and that's the direction we're going to go. Also, again, back to, this is a time of year where you're making a lot of decisions that impact your bottom line, and you should have a good guy that should be helping you through this. And that's one major thing. A lot of guys they're busy. They don't have time. Like, this is a really busy time of year. But I had a great tip, and a lot of you might already know this from one of my hedgers. Is he uses a black Sharpie in the tractor, or when he's harvesting. He had sold some seed in the past and stuff like that, and he's had to take a lot of notes. So when he talks to me, he writes everything in a black Sharpie, and then if it's really important, he'll take a picture of it. Obviously a dry erase on the window. Not a permanent. And then that's how he keeps notes. So, for you hedgers out there, it's an excellent idea. I like it a lot. So you don't forget about the stuff you're talking about and then implementing it. It's like you can be busy, and many people hedge while they're busy. And I tell you what, the most successful guys, when they're the busiest, are usually hedging the most. So that's just a cycle you want to break. There's no excuse. And I'll try to get more tips every once in a while, but I really like that, the black Sharpie, not only for commodity hedging, but just for your farm notes too. As you're busy there in the tractor, write your notes with the black marker, take a picture of it. Great idea. I like that one a lot.
So you have any insider info you want to share? I mean, I know you talk to guys across the country. What are you hearing? Corn yields, soybean yields across the board?
Corn sounds big. It's super consistent. Southwest Minnesota sounds average, which is still outstanding. And then Ohio's gotten dinged up in various parts of Ohio, and they're probably the worst droughty state. Started the soonest. The rest of the drought probably helped corn. It sounds like it started for everybody really. We've had no rain here at all. A little bit today, but I've been hawking nothing for a month and a half, 2 months now.
Not since July, it feels like.
But it seemed like it really helped the corn, didn't help the beans. So you heard all over the place on beans. At first, it was really all over the place on beans. Then it got kind of quiet and more consistent, and it was pretty good. And then the corn is the one where watch these reports. Like, it sure sounds like it's something special out there. And this is really widespread. This is not Minnesota by any stretch. I've heard 40 to 50 bushels in some parts around here, better than what they thought it was going to be. And then 20, 30 above what would be a good farm average. You're hearing that's quite widespread. So corn sounds like a monster. Now, you have other guys talking about test weights, and that's a really another annoying argument that we're not going to get into. How dry it got, how quick in beans, and all the yield loss on that because of how quick it got dry, quicker than they wanted to. Whether that shows up in USDA reports, I think this November report's going to be super important for corn and soybeans, especially corn. If they add bushels like they did last report, I think January is not going to be a nice report. If they take bushels away, maybe something with the dryness, there might be something to that. So I think this next November report is super important for corn. But it sounds big. Like, corn is the one where from day one, guys were shocked at how good this was. You go on Facebook, and of course they're not going to say that. It's going to sound like it's 34 bushels national yield in corn out there if you go to the groups, and I think you know which ones they are.
Yeah, I'm hearing the fields were full of weeds because of all the moisture early, and so that's affecting the harvest.
Everything on those pages. They were started with the best intentions, those pages, no doubt, but it seems to bring the worst advice I've ever seen in the history of the internet into those for some reason. The only people that are vocal have to be in the worst areas by far of the country, 90% of the posts.
Yeah, or that's just the type of person that's attracted to social media responses.
Yeah, I would say that's true. So I trust the network that I've developed over all these years, and it involves anywhere from commercial guys and everybody they know and all the farmers in that region to just a single farmer or the bankers. It's not just one-on-one. What did this guy get in his field? It's a wide net, and you get a pretty good feel for what's going on out there. Big on corn, questionable on soybeans where that yield's going to land. It wouldn't surprise me one bit if they bring it off a bushel or raise it a bushel or maybe even two in either direction there. I think more likely to go down than up in beans, but I thought that last year too, and it crept up every report. Corn, I think there's a nasty surprise ahead for the corn yield, but the demand's been phenomenal short term. So hopefully that offsets that, and we'll know more. I think November 8th is that report. I think that's a huge report for corn because it's going to kind of hint at what January is to bring, and there's been some nasty surprises in January. So what happened last year is we went up into about a year ago today, almost like October 19th or 20th, and then we topped out at 490. And I don't know that the grains bounced at all after that, but it was going vertical like it is right now last year. And then it just stopped one day.
I don't remember them going up at all because I know I had a couple guys who wanted to rebuy corn, and they never found the spot. Never found the spot to do it.
No, the calls didn't work. Nothing worked last year. My personal feeling is if everyone has the same plan and it feels like everyone's going to store as much as they can in the spring to see what happens, generally that's where they try to hurt the most people with the price. And that last year was the lows in end of February, beginning of March, because they had to decide whether to roll. Put options I had for corn went in the money, and a lot of guys exercised those into short futures. So I remember this. It was $3.97, I think, for the low after the option, the next Monday after the options expired. And that's about when people either had to roll or sell their corn. And it seemed to hurt the most people last year in that time frame. I would expect something similar this year, unless South American weather is really bad.
That makes sense. You talked about the exports on the Mexico was taking a lot of corn. I think I read today that China has not taken any corn. They've been
from the world, way down for the world in China. So thank goodness for Mexico and their aggressive purchasing down here. I really think that has to do with the low price, and I think that's why October is often a very supported month. You see a tremendous amount of demand for soybeans and corn. It hasn't really been happening the last couple of years. 2 years ago was really bad for corn. Last year got a lot better, but it was still pretty bad. But you're seeing normalized demand now this time of year, so that's great to see. Before we were fighting the numbers on the USDA, but the bad news is the USDA has got the demand numbers so high, the bar is set so high, it's hard to surprise the market with better than expected demand because the numbers are that inflated for the USDA's numbers. Beans, I don't know how we're going to get there. Never say never on beans. Corn's on a very nice pace, well above last year, but we are on the 5-year average as far as percent versus the USDA's forecasted marketing. It's kind of complicated to say it that way. That's why they list it. It's the only way because every year is a different guess at how much demand. So the percent of that guess is right at the 5-year average. So we're looking good there. Don't expect the numbers to change a ton, but at least it's not bad demand.
Yeah. Well, if the dollar keeps going this way,
it'll eventually catch up with the markets. Yeah, and
Yeah.
wheat's probably trading that right now. But wheat could be the sleeper. You're hearing a lot of rumblings in wheat. But, that talk about the old rope a dope. You hear that, and it doesn't ever happen. Then you give up on wheat and hate it or sell it all off the farm, and then you can count on a 2-month rally.
Right.
Seems to be a lot of news that can make it go up right now, and it has no interest in going higher, of course.
Right. Well, because everyone wants it to go higher. Just wait till everyone wants it to go down. It will rip higher, like you said, for 2 months.
Yeah, as soon as it starts raining for the Kansas wheat here into plantings, it'll probably just go straight up. And that's wheat for you. That's what it does.
That's what is it? Trade wheat, sleep in the street.
Yeah, that's a saying. That's a good one too. That's very true.
Yeah, I'm trying to remember last time I made money with wheat, and I can only think of times I didn't make money with wheat. But
I would use a dartboard for wheat. You'd probably do better. Buy or sell, and just have two pieces or two things you could hit on the board, and that's you probably have a better chance.
Yeah.
Wheat though has the support to where you could see higher prices this year for sure, but we'll see what the weather is for that winter wheat. I think that'll be the driver this year. Very dry right now.
It's crazy dry. I mean, leaves that are down are already crispy. We haven't had rain. My yard's very crispy, although it's October, so it could be covered with snow. So
yeah, I get to fish Otter Tail Lake not because I even want to. It's the only lake I can get my boat on right now. It's the river access. Even that access is really low, and there's it's right by the river. So yeah, and when we started this, all the way through July, you had about record levels in rivers, or as high as it's been in years. And it went from that to exceedingly dry around here. So we're just as dry as the rest of the country here. And but for grains, it was a good time of year for that to happen, and it looks like it helped corn a little bit.
Well, that reminds me. I'm sure you've taken care of it all, but we haven't had a garden update. And why that reminded me was your last garden update months ago was that you had a river through your garden. So how'd your garden end up?
Well, there's some life lessons were learned with this. There's two things. It went horrible, but then, that I guess that's what I get for planting okra and Brussels sprouts, and the leaks made it. I got cute, in the winter, you look at all these seeds, wouldn't it be cool to grow different color peppers? There's a reason why that stuff's not grown around here. So that was lesson number one. Number two is, maybe I'm just not cut out for gardening. I mean, it's definitely in the family, but it didn't go well. The one thing that did work, I think the jalapenos might have, and it didn't taste like anything. It went horrible. Yeah, and I'll take a picture of it. It's just all weeds now. Watermelon. I mean, I had some real ambitious ideas, and there's a reason why they don't plant that around here. You don't see a lot of okra in the field around here, do you?
There's not much okra around here.
Yep. No, I guess. So lessons were learned. I'll probably start it all over again, but maybe a guy should plant like carrots and onions and potatoes, things that are a little lower maintenance that you actually eat. I think I might try that one more time, but it was complete failure. I meant minus whatever I put into it. Yeah, I lost it all.
I do remember that lesson from my first garden was plant stuff that you actually eat, because you often end up with a whole bunch of the stuff you don't want.
Well, and not only that, the trays that we had up front, or I had up front, to get some sunlight in the late winter, early spring, the in between the glass panes there, it like got some moisture in there because the windows are, they're old, and now that's permanent, so that looks horrible. So if you count the windows, which I'm probably going to have to replace, I really went backwards.
You dug yourself a hole this year.
It wasn't good. No, I can't picture this happening again. No.
We'll have to put that picture up on our Twitter feed, so make sure you get a picture of the current garden before it snows here.
Yes.
All right. Anything else for this week, John?
No, just buckle up. We should see a lot of different looks the rest of this week.
Excellent. You want to leave a number so people get a hold of you if they want some advice?
218-731-1578.
Thanks, John.
Yep. There's no easy answer for all these. All very good questions, but you know that you're not warm if you're asking around. When you have a good guy, you're gonna have a lot more answers to these questions.